Good morning everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 13th of May. Bank of England stands pat, offers more Brexit warnings. On its last Super Thursday, before the EU membership referendum, the Bank of England remained on hold by a unanimous 9-0 vote. Although in the hours prior to the decision there was some speculation that one or two MPC members may vote for a cut, the vote showed otherwise, while the bank reassured investors that the next move in interest rates would most likely be higher. This caused the pound to strengthen immediately after the decision, but the pair quickly reversed those gains to trade virtually unchanged. In its quarterly inflation report, the bank revised down its GDP forecast for this year as was expected and reiterated that economic indicators received in the run-up to the referendum may be less informative, which leads us to believe that these data are likely to have a much smaller impact on the pound than otherwise. We will therefore be patient until the referendum smoke clears in order to assess whether these data will improve in the event of staying, though Carney interestingly said that the effects could endure even after the vote. In the case of a leave scenario, the Bank of England said it would likely face a trade-off between curbing high inflation on the one hand and trying to boost growth and employment on the other. Overall, the message we received from this meeting is that the Bank of England is firmly on hold heading into the ballots and that officials stand ready to adjust policy if needed. The focus now shifts back on the incoming referendum polls in order to gauge sterling near-term direction. As the vote day draws nearer, we expect the pound to continue trading in a volatile manner, especially if the poll battle between the stay and the leave campaigns remains neck and neck and the proportion of undecided voters stays elevated. In Norway, the Norges Bank stood pat as well yesterday, citing that oil prices have risen somewhat since their last gathering, where they decided to cut rates. Since then, the NOK has strengthened more than the bank expected, but that appreciation is related to the rise in oil prices. Overall, officials noted that the situation has improved somewhat, but not enough to rule out further rate cuts in the course of the year. As for today's highlights, Germany's preliminary GDP data for the first quarter have already been released and showed that the German economy accelerated to 0.7% quarter-over-quarter from 0.3% previously, beating expectations of 0.6%. Eurozone's preliminary GDP growth for the first quarter is also coming out, and expectations are for the preliminary figure to confirm the flash preliminary print and show that the Eurozone's economy grew by 0.6% from 0.3% in the fourth quarter. Given the encouraging results from Block's growth engine, we see some upside risks around Eurozone's forecast, maybe for GDP to accelerate above expectations as well. This could bring the euro under renewed buying interest, at least at the release. In the US, the main event will be the release of retail sales for April, and expectations are for a strong rebound from the previous month. However, both the Conference Board and the University of Michigan Consumer Sentiment Indices for the same month missed expectations for a rise and instead declined. As a result, we see high downside risks associated with the forecast, perhaps for retail sales to rise by less than expected. This could reverse some of the greenback's recent gains. The PPI for April is also due to be released and expectations are for a rebound. We have no speakers scheduled for today. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.